Hello, folks. Did a recording earlier, live session, and I started a point I was wanting to make in regards to why I covered over here on the pound dollar short. Real quick, let me take a couple minutes and slow down because there's 1,000 things being asked of me during the live presentation, and I was a little rushed because I had to get my son to school. And in fact, he ended up going to school late, so I'm in the woodshed with my wife, and as I should be. So I have to be a little bit more mindful of my time. I made an error as a parent this morning. So now that I have a little bit more time, let me explain to you with greater detail why I chose the levels at which I covered the position. Obviously, we have the big move yesterday that took place on pound dollar. We mentioned on recent teachings and live sessions that on the pound, on the daily chart, we had identified two areas at which the liquidity pools will be residing. Those were these particular lows. Now, once this low was taken out, once this low was violated here, there's literally nothing else at all in the form of support. Nothing nearby. Okay, so there's a big abyss below this low. Okay, so if we know that the market obviously was in free fall, they had nothing to find support at. So the central bank had at its disposal, it's the luxury of this pricing extremely low. So anyone that would have been buying this as an old low and finding support supposedly, even if they allowed this little breach below it, and there are some folks out there that actually emailed me saying that they were trying to do that very thing, which I don't teach that. We weren't talking about this being a bullish market. In fact, we said this was a very, very bearish market. So when this low was violated, yesterday we had a complete washout of all these price levels, and it was very poorly and efficiently traded. In the live presentation today, I showed a 1-minute chart, and I did this only to illustrate what a liquidity void looks like. And it looks like this. The market was on this candle here, it opens and trades down here in one price move. The next price move is here, it reprices all the way down here. So what's going on between the close here at 123.99 to 121.86? 123.99 to 121.86. That's over 200 pips in one repricing. From the moment it closed this candle and reopened this one, instantaneously we're over 200 pips different. Central bank repricing. It's not that that's a lack of liquidity. It's when the market is able to jump down to these levels. What made it fundamentally and significant down here, I got to go through my long-term charts and be able to pull it up through the futures market, okay, and give me some justifications of why it went down here. But for now, I don't have any reason to give you, and I probably should have did this before the video, but it is what it is, so just accept it. Just know that I'll do my best to find out what's down here that led them to draw a price that low and why it should have stopped there. Not that we could have expected that. Nobody could have expected it. The only thing we said that this market was in deep doo-doo, okay, and it didn't have any support underneath us. So, but the gap between these in here in this big rundown, this is what a liquidity void is, where there's gaps in between pricing. This same thing is occurring on all the quick runs higher and lower, and we draw a little box over this area, and we expect price to come up and draw into it. Now, I didn't expect this to fully fill in right away, but I did expect this portion of the move to get closed in. And if you go into MT4, you can see after the void is closed, I cleared these two highs I wanted to sell them at. Market traded just a little bit more against me. Then I had to sit through all this congestion, and then all the way over here, that's where I collapsed the trade at, right at the low. Okay, and price is now over here. Let's watch it tick around. You can see it's live. Okay, it's all happening right now. And there was the cover. The other exit was right here. I took first profit here because I'm going to show you there's no guarantee that it was going to hit my level. Now, why was this level my level down here to cover? Let's go out to a 15-minute time frame and zoom back in. Now, I want you to look at the buys of the candle. Now, again, in this mentorship, I want you to understand that the wicks are always going to be reaching for liquidity, but the bulk of the volume is where you want to focus your attention at. Just like the bodies of the candles up here, you want to focus your attention there. If you take your fib, and there's no magic in this, okay, it's just I'm using it for discount and premium purposes. This body's low up to this body's high. I'm identifying that range here and measuring it, okay? I accept the fact that these wicks are going to be the least in terms of significant. The only reason why it would be significant is if my stop was down here. That's when it's significant. But for analysis, I'm focusing primarily on the bodies of the candle. So I'm drawing my fib up from the bodies low, the lowest of the two here, up to the bodies of the candle here. Okay. My belief was I didn't believe that it was going to come all the way up and close that in there. Because if they're going to slam it down, they already have people up here that was long. So they're not going to give them a chance to get back out of that position just a couple hours later, and really, that's not likely to happen. So if they're going to punish them and keep them on the other side of that market wrong, offside, my expectation is I'm going to focus on the fact that this is the range that we're probably going to stay in, okay? And keeping that, I had this objective to touch the 79 retracement level right there. That's about the deepest I could get my expectations on seeing price go lower. That price level comes in at 122.31, and again my cover was 122.35. So I was only 4 pips away from the actual level, and the low is 122.30, and I was only 5 pips away from it, or essentially the spread plus 2 pips. So not a bad little example of identifying where to cover. And the other one is at the 62% penetration level. I wanted to cover at that price point as well. There's no guarantee that I was going to get that. So I took first profit there, and then the limit order I allowed to get the rest of the portion off. It was only one standard lot, half the position off, and then final position taken off at target. And that's that. So that's the reason why I chose that, and I didn't get a chance to say that in the live presentation this morning. So I apologize for my inability to focus. So with a demo account hooked up to my FX book, the balance is now $7,172.84, almost 44% return in short time. So no, it's not what you should be expecting. No, you should not be expecting to learn how to do this in 6 months. I've been doing it for a while, just letting you know that what's available in terms of your long-term goals. And you don't need a whole lot of setups. This is only really done over the course of 3 trades, but split with partial profits. That's why it looks like it's 6 trades, but it's only 3 trades, but 44% return. So not bad. I'm going to close this and wish you all a very good weekend. Again, reminding you that I have folks that are in the rears with me, and I'm giving them the ability to get caught up. Much more lenient than I said I was going to be, but this is the last month I'm going to be lenient. So you must have your payments on time to me on the 1st of every month, beginning November 1st. All the content for this month, I will share with you a teaching series, titles, all that business for this month. It'll be on the forum, and I'll give you the dates when these particular teachings will be delivered to you, so that way you can have a timeline on when to expect what. Okay? So with that, I wish you good luck and good trading.